Okay, everybody, we're going to go ahead and get started here. Trying to start on time as usual. So this week we are going to be talking about inventory reports. We've been doing so much discussion around how to use inventory, workflows around inventory, troubleshooting inventory, all those things, right? But reports is why we put all this data in the system, right? What is our end goal? What are we trying to make sure that we're tracking? So we're going to look at 4 key inventory reports today. We might get to a couple more if we have time, but I always want to make sure that we can cover everything accurately. So I'm Marjorie Adams. I'm the CEO of Fourlane. I am a consultant at heart. I miss consulting more than anything, but I do get to do these webinars, which help keep me in the know, I guess is the right words. And then, of course, shadow a whole bunch of things here at Fourlane. But let's go ahead and dive in. So just as a reminder, we do have a Fourlane YouTube channel. So all of these videos, if you missed last week as an example, we went over multiple vendor price lists. We went over inventory troubleshooting a couple weeks ago. So if you missed anything, you can go check it out on our YouTube channel. We also have a whole bunch of videos up there. I always believed from 2011 when I started recording these videos, way before people were recording videos, I did not want to have somebody have to pay me for the how-to, right? How to do things. I really wanted to focus on the why to do things a certain way, right? The strategy, and that's what we do here so well at Fourlane. So anyway, go check out these videos. There's a lot of how-to things in there from forever ago. Still apply the same today. So what we're going to be looking at, obviously, as always, we're always in product. That's where I like to be the most. That's where I feel the most comfortable. So we're going to talk about inventory reports today. The first one, balance sheet versus inventory valuation, which we have looked at in prior meetings a little bit. We want to make sure we understand really what's going on there. Balance sheet detail, total by item. So we're going to look at that, what impact that has. Inventory valuation detail. So a couple summary reports, a couple detail reports, and then we're going to talk a little bit about Accountant's Toolbox and troubleshooting inventory feature in there. That will lead us into one of our future sessions, which is negative inventory, how to deal with negative inventory, because QuickBooks doesn't like that, right? No software. This is not just QuickBooks. No software likes negative inventory. Let's be real. Okay, so dive in product here. Make sure if you have any questions along the way, go ahead and ping in chat. If we can't get to them on this call, because it is a lot to cover, I know it's just reports, but it's a lot to cover. We'll get back to you after the fact. Also, if you have any suggestions for things that you guys need future trainings on, please pop them in there in the chat box, and we'll take those into account. You've seen us kind of adjust on the fly, so make sure to put your what's needed in there as well. Happy to accommodate. Okay, so let's go in product. So I am in a sample file, in a manufacturing sample file in 2022. So you guys can see that there. So the reports that we're going to focus on first, as I mentioned, we're going to look at balance sheet versus inventory valuation summary. Now, there are a lot of people out there who have a lot of opinions on how you can run inventory. A lot of people do it in Excel. I don't like doing anything. Well, let me clarify. I use Excel to possibly look at data. I do not like using Excel in my workflows, right? That shouldn't be part of your workflow. A lot of people also just don't track inventory. I was on a phone call with somebody interviewing for a position here, and it was so interesting because the company that she works for switched to Intact out of QuickBooks Enterprise into Intact because they wanted more controls over the accounting process. Right? It was a trades industry that had inventory on trucks, but they didn't want to track inventory. So they were putting these parameters on their accounting staff, which is pretty small, but not putting the same kind of controls around their technicians out in the field. So it was interesting to me. So let's take a look at it. So first one in here, coming on down, we're going to go to balance sheet standard. Of course, whenever you run this report, you always want to make sure we're looking at accrual basis and we're looking at the same dates, right? So for all of our customers that work with us in month-end close work, CFO, outsourcing work, things like that, when we help close their books, we are making sure that as of the previous period, right, whatever period we're closing, we tie out. So that date matters because both this report and the inventory valuation summary report are an as of date. What is my balance as of 12/15? What is my inventory valuation summary as of 12/15? So I have this report first. This covers 2 reports, right? So, and then we have our inventory valuation summary as of 12/15. So these 2 reports, when I come in here and I look at them, what I'm really looking for is my asset value. But before I go to that, making sure my asset value ties to my balance sheet. But before I go to that, let's just talk about what these reports mean. So one of the questions I ask interviewees when they are interviewing here is I ask them, what's the purpose of a balance sheet, right? So why should I care about my balance sheet? Everybody talks about cost of customer acquisition and what are my revenue numbers and what is my, bottom line and am I in the red or the black and all the, right? None of those are balance sheet related per se. So balance sheet kind of gets this, a little bit side, it doesn't get as much attention as some of the other reports get. But the balance sheet is really what tells you the state of your company, right? So it tells you how much you have in current assets versus current liabilities. How liquid are you? Tells you your worth of the company, right? So what is the total equity down below here? I mean, it tells you everything. And it's an as of this point in time report. Whereas if we look at a P&L, which is our other report that we look at all the time, P&L is not as of this point in time. It's showing us, so this is, balance sheet is all history leading up to right now, right? P&L is showing us January 1st to January 31st. Like it's showing us a period of time, not all history leading up to that time. I mean, you could look at all history, but it wouldn't help very much. That's not super helpful. So balance sheet is as of a point in time. That's what we're looking at. Inventory valuation summary report, where this is super important. A couple things about this report. So first of all, you can come up here and hide zero quantity on hand. I don't like to do that because sometimes even though you have a zero quantity on hand, you still have a value. And that's something that you need to pay attention to, right? Because sometimes when there's rounding or whatever it is, there's adjustments, it still ends up with a value here, even if it's like negative 0.02 cents. We need to clean it up, right? We need to get rid of it. The other thing that they have on here, this is something they added a couple years ago where it says show inactive inventory items. So what that means is that when I run it normally, just run it without making any modifications, it shows me all active inventory items on this list, okay? If there are any items that you've marked inactive, so let's just go in and mark this ANBA BL inactive. Okay, gives me all the warnings, shouldn't do this. So when I come in here, since I'm not showing inactive inventory parts, it's not on my list, right? But that inventory part actually had a value and a quantity on hand. But that's not going to show up here. So that's one of the reasons you've seen my other video. If you haven't, go take a look at it about why these two may not tie out. But that's important to know here. I don't like that they added this checkbox because, yes, now I can see the inactive items, but that's not fixing the problem. The problem is that I have some items that are inactive that are holding a quantity and value, and I need to go fix that, right? You should not have to check that box. So coming down below here, what do we see? We see our items. They're organized by inventory, and then assembly items go at the bottom. They go in header items or sub items, right? So you have header items or sub items in here as possibilities. Then you see your on-hand quantity as of this date. You see your base unit of measure used, the average cost. So when we're editing our item, let me go make that one. It's going to drive me crazy, right? So I got to make it active again. When we're editing our item, we're not looking at cost. We're looking at average cost, right? What is the average cost at that point in time? Now, this report may not tie out to when you look at your average cost here. And the reason could be because this is showing you for all time. Even if you have future data transactions, this is showing you for all time average cost. And this report might be showing you as of a period in the past. Okay. And notice they're rounded here. Average cost 72.18, 72.17784. So it goes 5 decimal points down here. That could also cause some errors, right? A little bit of differences. But it won't cause the differences in the balance sheet. So then we have our average cost, again, leading up to this point. We have our asset value, which is just 37 times 72.18. We have our percentage of total assets. So how much of the overall, right, we get to 100% at the bottom. How much of the overall value of the asset does this hold? So it's literally just this 2,670.58 divided by the total at the bottom. Sales price, so that is pulling from the item card. What's our retail value, right? So it's taking 37 times 150 with the retail value. And what's the percentage of retail value? So if I look at the overall retail value for all these items, what percentage does it hold? A lot of times people don't use these last two columns, but it's important to know why they're there. Okay, so what we want when we're looking at this report, I mean, obviously you want to stroll through this report every once in a while and look at asset value and make sure that it seems appropriate, right? Maybe not asset value, actually average cost, because asset value can be, it's a multiplier, but average cost, you come in here and you go, like these pedestals are little pieces of plastic. Why would they cost $385 each? I don't know what those really are. So, but it's good to skim through every once in a while and visually see if these look appropriate. Okay. For the purpose of this session, what we're talking about is we want the inventory valuation summary report to tie out to the balance sheet. Okay. So in the balance sheet, there might be a couple of different inventory accounts. So you might need to add a couple of things together. But in this case, right, I have 122,000 and I mean, maybe 164 minus 41 add up together. Let's see, 164,086.39 minus 41, 191.63. 122,894.76. Oh, look at that. They do add up. Well, I guess I could have seen that here, right? 164.41. So in this case, I'm taking two separate accounts, materials inventory and finished good inventory, which is negative, which obviously we know we have a problem. And those tie out 122,894.76, 164.08. So the fact that those two tie out mean that my inventory ties out to my balance sheet, which when we are at the end of the month or end of a period closing out our balance sheet, we need to substantiate the values in there. Again, go watch my other video on inventory cleanup. You'll see that. So these two reports are super important. You should be running them at least once a month, if not more frequently, to make sure the two tie. Okay, the other report that's important is we want to look at our inventory valuation detail report. Our balance sheet detail report. So we come in here to custom reports and do transaction detail. Now I'm going to actually just really quickly, just to make sure that we have some things to see. I'm going to create a bill and I'm going to put it to not an item. I'm going to put it to the balance sheet for materials inventory. Okay, so if I don't point it through an item, it's going to mess everything up for me when I look at my inventory valuation summary compared to balance sheet. So that's one of the things we see. We also see people adjust quantity value on hand of inventory against inventory, which of course is going to be a wash, right? Let me find an item in here. Okay, and then of course the most common thing that we see is journal entries, thanks to our people who tell us to go in there and do an adjustment to inventory at year end, right? Tax, AJE. We don't want to do that. We need to know what these things are. The materials inventory and my offset is going to be cost of goods sold. Let's just say save. So these are the three most common things we see. So if I come down to my custom transaction detail report, what I want to do is I want to look for all time. I'm looking forever in history because that's what the balance sheet does for me. I want to total my accounts by item detail. Okay, so when you total by item detail, it's literally going to total by each individual item on the balance sheet. And then I filter. I just did everything to my one inventory account for materials, so I'm just going to do materials inventory. But normally you would need to filter for both the materials inventory and the finished goods inventory, right? So all accounts that we have on our balance sheet that are supposed to be inventory related accounts. Okay, so I'm filtering for just those. Well, let me just do it correctly. So materials inventory and finished goods inventory, because those two hold inventory numbers in them. And I say, okay, now this report here is going to show me, if I go back to my inventory valuation summary, it's actually going to show me, it's 240.75, ties out 240.75. That's not what I'm really looking at here. What I'm looking at here is I'm looking at down below at the very bottom, whoops, everything that has no item associated with it. Because if it has no item associated with it and it hit these accounts, then it's not going to show up on my inventory valuation summary. Right? Because inventory valuation summary only shows me items. And these are all things that hit my balance sheet account that are not items. Okay, so I'd have to go in and fix these. So this report is really important to get to and to review periodically, because we need to see, first of all, we need to course correct, right? Who is, come in here, add in who and when did they put in a bill directly to inventory? Because that should never happen. When would we do that? Why would we put a bill to inventory and not put an item to it? So I need to go teach the admin, that's me. I need to go teach them not to do that again. Who would put an inventory adjustment against inventory? Oh, me again. Right? So we can go teach them. We use this to teach so we stop people from doing it in the future. Okay. All right, so that's an important report. One of the other reports that is very important is your inventory valuation detail report. Okay. Now you can spot check some of these things like I was showing you before. But this inventory valuation detail report, this is one of the reports too that we suggest people run through monthly. And this is for a certain time frame, right? So you can run it for all time or you can just run it for this period of time. So, as a one-time cleanup, you need to run it for all time. As just, if you're looking at it monthly, maybe, you can just look at it monthly and not have to worry about history on it. But what is this report showing us? It's showing us the transactions that are affecting our quantities, okay, affecting our on hand, which we'll talk about that more in a minute here, but what the average cost is, right? And so that's super important for us to be paying attention to. Over time, now this, right now, right, supply chain and all the things, Normally I wouldn't be saying this, but right now it matters a lot because we want to see that average cost. How much is it jumping? How much is it going down? Historically, what we would tell people is your average cost should always be declining because you're buying more and more product from your vendors and you've negotiated better pricing. Right now, maybe not so much. But what we're looking at on here is we want to look at the average cost and fluctuations in average cost. Okay. The most common fluctuation problem that we see is unit of measure issues. Right? Instead of putting it by each, they receive in 17 bushels of it or boxes of it or whatever, but they put in the price of the each, and it drives the cost way low. Right? Or they put it in as 17 eaches, but with the price of boxes, and then it messes up pricing, and then there's usually negative inventory too and stuff like that. So it generally is an issue with unit of measure. But if it's not an issue with unit of measure and your pricing is jumping all over the place, right? Here's 150 down to 27. And this is something we should probably look at. Like, what is happening? I mean, not that I'm going to argue with that. I will take it going from a value of 150 down to 27. That's a good fluctuation, but still would want to know why, right? What happened? So what we do with this one a lot of times is we'll run it and we'll actually drop it into Excel. Let me do that. Show you what I do. And we'll show customers on a periodic basis, right? So we look at monthly, when we go through monthly close, and we highlight the ones that they're having issues with some kind of fluctuation. Okay. So you guys have seen some of my if-thens before, but let's just do one of my if-thens real quick. So I'm going to hide all these columns. I'm going to hide, because all I care about is this asset value. Hide this, and then here I'm going to put in into this column equals if this is equals blank, then return the line above. If not, return this. Okay, so it's going to play with me on formatting. Hold on, let me copy all this sheet to a new Excel spreadsheet because it doesn't like me sometimes. Okay. Special. That's because of my output here. Okay, let me try again. I don't know what I did with all this. Let me try again one more time. No. Okay, so let's see. On here, export to Excel, because I don't have my report set up. So this is great. So create a new worksheet under advanced. I want to take away my space between columns because that's super annoying. Don't give me the guide, and the rest of it should be okay. Okay. Why it wasn't letting me do these things. So what I'm trying to do is I'm trying to get the item on every line, right? The other way to do this, actually, it's probably a faster way than me playing around with Excel, is to customize this report and add in the item. So it depends on how you have your item listed, but now I have got the item in there, right? So let me, instead of getting all fancy with my Excel stuff, let me just do it that way. So I have the item on every line, so now I know which item to compare, right, against. Okay. So I can actually now hide everything. Hide. And all I care about is average cost, hide, and value, hide. And I can go in and sort by just these columns, get rid of all the spaces, data, A to Z sort. I have headers, and I'm going to sort by item. Now they're all in order here. So what I'm doing, well, actually, before I do that, if you're going to sort in order, you have to add a column in and first put in the order, right? Because if I just straight sort, it might put the values out of order of values, right? Because the way that the valuation works is that it goes in order of date of the transaction, and then beyond that, it goes in order of created time of the transaction. We want to maintain that order, but I'm just trying to get rid of all the spaces, basically, right? So anyway, I'm not going to play with all the formatting right now. So what I want to do is I want to do an if then, right? I'm saying equals if this equals that, if this equals the one above, then take this, then take this minus that. If not, then just return this here. Okay, so it's just returning 45 cents. And I copy this down, not super exciting stuff. But then I come down here and I say, okay, there's a change, right, at this point where we go down $3.79. So it's pointing out to me when there's been major changes. So let's go down to the 150 and 27, right? So major changes happening there. So the second thing that I'll do is I'll add in another column and I'll say, okay, well, I want to know the difference of this over that. That's 1, right? So I need to ignore the ones. And I want this to be a percentage. Okay, so I can see what percentage of change is happening. Right? I don't know why these ones aren't going into percentage. It's just really not liking me right now. Because basically what I'm looking for is I'm looking for anything that has a material change. And those are the ones I want to focus on. So here, 441% change. I need to focus on that one. So then I'll usually do one more if then, and I'll say equals if, I like if then statements. If this is greater than 5%, then return XXX. If not, leave it blank. All right, so that's greater than 1%, so it copies down. And it just points out to me the ones that are greater than 1%. And probably I did this wrong. I shouldn't have had it return the 100%. Right, so it just is pointing out to me the ones that I need to pay attention to. Okay, now this one's less than 5%, so that's why it's not there. It's showing up here. So I do another column for less than. So basically I use Excel to get to some of the data easier that I need to get to. It looks kind of funky here, but that's what I'm focused on, right? Is I'm focused on getting to the data. So if I change this to say if it is less than 5%, didn't save. If it is less than 5%, then flag it, right? So flags a lot of them. Anyway, so what we're looking for is we're trying to get to easily a way for us to, I mean, you can scroll down here and look, right? But easily a way for us to see the issues that we're having with our average cost swings. Okay. Now, the last one I want to show you, and I just have a couple minutes, I know. The last one I want to show you, though, is I want to go into the Accountant Center. So if you do not have this Accountant Center, you can go in and set up a user in Enterprise. You have to give them the role of external accountant, and then they'll be able to see this accountant's user, okay? Under the Accountants section, we have Client Data Review, and we have Troubleshoot Inventory. So this is a really powerful report as well. It's not really, it's a dashboard, but it's really a powerful report. And you could get there also by dropping into Excel, right, as well. But what you want to do in here is you're looking at all items, and I suggest, going back for all time, the first time you do this. And you want to alert if there is negative inventory anytime. in the date range that we've selected. Because QuickBooks doesn't like negative inventory. It throws it off, right? It doesn't understand how to handle negative inventory. So what this report does, right, is it shows us any time in history, and you can filter by, all active, etc. But any time in history, it'll flag for us if an item went negative at some point. Now, in this case, we can see because the end quantity is negative, so that's pretty obvious. Down below here, if we look, I guess I don't have any other ones. Because let me go to 2025. There we go. I was going to say, I know I did this. I set this up before. So in here, you can see it's flagging them even though the end quantity is positive, because at some point in history, these items went negative. So this report helps us to narrow, and then I can go look at my inventory valuation detail report for all time and just go to those items, right? So we're looking at our POCODB. So I can customize and filter just for that item. Whoops. Hit enter instead of POCODB and see when it went negative and what happened, right? So it looks like this is, a very simple thing. The bill was dated 10/10. The invoice was dated 10/9. Now, of course, if this was an open period, I would say go move the bill or move the invoice to date it after, then it never went negative. So as an example, if you can, 2 days earlier, right? What's really the swing there? So I say save, yes, yes. Now that I saved that to move it 2 days earlier, never does it go negative, which is what QuickBooks likes. Okay, and I come back in here, it's not flagged anymore, right? So this report helps us get to faster when we have a lot of inventory parts. When in history has it ever been negative? All right, let me wrap it up. So those are just a couple of inventory reports to pay attention to. Hopefully you guys learned something. Next week, we will be doing some job costing inventory, doing issue tickets. A lot of people do not bill clients for inventory, but need to use inventory to cost against jobs. So we're going to talk about how to do that. Serial numbers coming out, multiple warehouses. As always, here at Fourlane, we're focused on getting you data to make decisions, right? Which is why those inventory valuation reports matter so much. That data is crucial, and it has to be accurate for us to be able to make decisions. That's all I got for you guys today. I hope everybody has a great rest of your week. Let me know if there's anything I can do to help. Thanks, guys.